Hello folks, this is Tony Drake from Drake & Associates with an educational economic update for March 2017. In this month's video, we'll discuss some of the major headlines that influence markets in February and provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. February 2017 was a month filled with record highs in the domestic markets. The S&P 500 and NASDAQ both hit a number of new highs last month, while the Dow went on a record-busting streak. In fact, after reaching 20,000 for the first time ever in January, the Dow hit record highs every trading day between February 9th and 27th. The last time we experienced a string of records like that was in 1987, and this is only the second time it's happened in the past 120 years. Seeing stocks rise like this can be an exciting experience, but I want to caution you not to get caught up in the euphoria. Just as emotion has no place in investing when the markets are volatile and challenging, the same rule applies when markets are growing. So let's dive deeper and review some of the fundamental data we learned in February to better understand where the economy stands and how it's going to affect you. On the labor front, last month gave us somewhat mixed data. We received the January jobs report, which showed that the economy added far more jobs than experts predicted, and continued its 76th straight month of growth. But on the other hand, hourly earnings and labor force participation each increased by only a small margin, while unemployment was also up slightly as more people entered the workforce again. Ultimately, the job data released in February indicates that the labor market is growing, but the pace is still not what many people would hope for. Another area where we saw modest growth was in the revised GDP or domestic product. The numbers for the fourth quarter of 2016. Now, in each quarter, the Bureau of Economic Analysis calculates a U.S. GDP, which is the total dollar value of everything that people and businesses produced during that time period. This measurement is a critical indicator of our economy's health. So investors and financial analysts watch its changes very closely. And because the Bureau receives an updated data after the quarter ends, they will release 3 GDP numbers over the course of 3 months: the advanced number, the preliminary number, and the final number. In February, we received the second or the preliminary reading of GDP for quarter 4 of 2016. Consensus was that the reading would increase to 2.1% from the 1.9% growth in January's advanced report. But in reality, the reading didn't change and it stayed at 1.9%. For comparison, the quarter 3 GDP came in at 3.5% growth. Rather than indicating that the economy is slowing down, however, just one aspect of GDP contributed to most of the decreased growth, and that was lower net exports at the end of 2016. Trade is integral to our economy, so maintaining a healthy trade balance is key. As the political environment evolves, changes to trade deals could affect this balance and, as a result, affect our GDP. For now, no one can say what new policies may be on the horizon or if markets will continue to reach even greater heights. So we'll continue to analyze the data and search for the most thorough view of our economic standing. This perspective is the foundation of our support, and we're here to help you find the clearest perspective amid the hype and excitement. That's it for this month's educational economic data. We have some upcoming Social Security and retirement classes in the Milwaukee area, and I wanted you to be aware of them. Please visit wealthwisconsin.com to learn more, and be sure to listen to the Retirement Ready radio show on AM 620 WTMJ on Saturdays at 1 o'clock. Once again, this is Tony Drake from Drake & Associates signing off for the month of March 2017. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We're happy to talk. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or the solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are provided by Drake & Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Law Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products.